Welcome to The Explainer. Today, we're running a precision risk audit on America's much-hyped nuclear renaissance, and we're going to uncover how its biggest vulnerability might not be a rival power, but, in fact, a key ally.
You know, that quote really hits the nail on the head. This isn't about some sudden dramatic collapse. No, it's more like a slow strangulation, where all these ambitious government policies run headfirst into the hard, cold reality of a broken supply chain.
Okay, so here's how we're going to dissect this. We'll look at it through three critical lenses. First, can the supply chain physically even handle this? Second, does the financial math actually add up? And third, what does this all mean for the geopolitical chess match with China?
On the surface, you'd think the U.S. nuclear sector is poised for a massive revival. I mean, it's backed by powerful new legislation and surging demand, coming from a pretty unlikely place, the AI revolution.
And what's really fascinating here is just the sheer scale of the ambition. You've got the Advance Act, which just dramatically streamlined regulations. Then there are executive orders setting this aggressive target of 200 gigawatts by 2050. And on top of it all, the global pipeline for small modular reactors, you can think of those as smaller factory-built nuclear plants, is absolutely booming, largely to power the massive energy needs of the AI industry's data centers.
But here's the problem. All of this ambition is built on a really fragile foundation. For all that policy momentum, you know how many SMR gigafactories are actually under construction in the U.S.? Zero. The U.S. only meets about 1% of its own enrichment needs, and crucially, it relies on imports for over 90% of the key components needed just to build and maintain its reactors.
And that brings us right to the central threat of our analysis today, the European Union's potential use of a trade bazooka. We're talking about broad retaliatory tariffs that could exploit these exact vulnerabilities with, well, surgical precision.
So let's be crystal clear. This isn't about blocking uranium shipments. That would probably get an exemption anyway. This is about disrupting the entire industrial ecosystem. We're talking about tariffs on specialized steel, on complex machinery, and on the critical engineering services you absolutely have to build and maintain a nuclear power plant.
All right, let's move to our first lens, the supply chain itself. How would a trade war physically break the system? This is where all that policy theory gets a big dose of industrial reality.
To really understand the risk, you have to pinpoint the most critical choke points. Where is the system most dependent and therefore most fragile?
And this table just illustrates the core problem perfectly. The U.S. lost its heavy forging capacity decades ago. What does that mean? It means for the massive components at the heart of a reactor, the vessels, the steam generators, it has no domestic option, none. They have to come from suppliers like Framatome in France. And according to the World Nuclear Association, tariffs on just these components would immediately tack on 12 to 18 months of project delays and a 15% cost increase.
This dependency isn't just about future projects either. It's embedded in daily operations right now. The French company Framatome already fabricates fuel for a third of the existing U.S. fleet. Another one, Uranium, manages waste and enrichment services with contracts worth over $1 billion. They are deeply, deeply integrated into America's current nuclear infrastructure.
Okay, now let's audit the financial consequences. This is where seemingly small tariffs can trigger a death spiral of compounding costs and fatal project delays. The first hit is direct cost inflation. A 15% tariff on materials like specialized steel immediately adds hundreds of millions of dollars to the budget of a multi-billion-dollar project, and that's before a single new wire is even laid.
But in nuclear finance, time is way more punishing than material costs. These are not like other construction projects. A delay for a single massive component, like a reactor vessel, can stall the entire timeline for 18 months or more. And that's where the financial math gets truly brutal.
So the crucial point here is that in a high-interest rate environment, these delays aren't just inconvenient, they can be fatal. Each year a multi-billion-dollar project sits idle waiting for parts, its financing risk can effectively double, making it financially unviable for investors and utilities.
And this chart really shows the end game. Tariffs and delays inflate what's called the levelized cost of energy, or LCOE. That's basically the total lifetime cost to produce power. They could push nuclear's costs so high that natural gas, the very fossil fuel it's meant to replace, becomes the cheaper default option for utilities. The renaissance dies right here on the balance sheet.
Finally, let's pull back and examine the geopolitical fallout.
A trade dispute doesn't happen in a vacuum, and this transatlantic friction creates a massive opening for another global player.
To put it simply, while the US and Europe are engaged in a self-defeating trade squabble, they are effectively handing the future of the global nuclear export market to Beijing on a silver platter.
And you can see the cascade effect here. An EU-US trade war leads Europe to prioritize its own sovereign supply chains. That shuts out American SMR tech. U.S. developers then lose access to the European pilot projects they desperately need to scale up and prove their designs. Meanwhile, China, totally unhindered by this infighting, scales its reactor designs and starts exporting them to hungry markets across the globe.
So the ultimate takeaway is this: the EU's trade bazooka doesn't need to directly target the nuclear industry to kill it. It just has to poison the soil. It erodes the very foundations, predictable costs, manageable timelines, and investor confidence that the U.S. nuclear comeback desperately needs to grow. This leaves policymakers and investors with a critical question. In the event of a broader trade war, how can these vital nuclear components be strategically carved out and exempted to protect not just a single industry, but long-term energy security? Finding the answer to that question is now a multi-billion-dollar challenge for the entire Western alliance.